Building a balanced investment portfolio is a complex endeavor, often fraught with challenges. Investors grapple with market volatility, unpredictable economic conditions, and the sheer volume of investment options. Determining the right asset allocation and managing risk effectively can feel overwhelming. Many lack the time, resources, and expertise to navigate these complexities. Emotional biases can cloud judgment, leading to impulsive decisions. Fear of losses can cause premature selling, while greed tempts high-risk investments. Market timing is another common pitfall. These biases can significantly hinder performance. Information overload presents another obstacle. The influx of news and opinions makes it hard to discern valuable insights. Keeping up with trends and indicators requires significant effort. This can lead to analysis paralysis, preventing timely decisions. A more efficient, data-driven approach to portfolio management is needed. Artificial intelligence, or AI, is revolutionizing the investment landscape, offering powerful tools for portfolio construction. AI can analyze vast amounts of data, identify patterns, and generate insights impossible for humans. This empowers investors to make more informed decisions and achieve better outcomes. AI provides objective analysis and automated trading strategies, overcoming emotional biases. This leads to greater discipline and improved portfolio performance. AI tools process data in real time, providing up-to-the-minute market insights. This allows investors to stay ahead and make timely adjustments. Embarking on the journey of AI-driven investing requires access to the right tools and a foundational understanding of key concepts. Several AI-powered platforms and software solutions are available, catering to different levels of expertise and investment goals. Choosing the right tools is crucial for success. Familiarizing oneself with basic AI concepts is essential. Understanding terms like machine learning, deep learning, and natural language processing can help investors evaluate different AI tools and interpret their outputs. This knowledge empowers investors to make informed decisions about which tools are best suited for their needs. Data is the lifeblood of AI. Access to high-quality financial data is crucial for training and deploying AI models. Various data providers offer historical market data, economic indicators, and company financials. Selecting reliable data sources is essential for ensuring the accuracy and effectiveness of AI-driven insights. Programming skills, while not mandatory, can be advantageous for customizing AI models and integrating them with existing investment platforms. Languages like Python and R are commonly used in AI and data analysis. Developing basic programming skills can enhance an investor's ability to leverage AI effectively. Building a balanced portfolio with AI insights involves a systematic approach. The first step is to define investment goals and risk tolerance. This provides a framework for guiding the AI's analysis and recommendations. Clearly defined goals are essential for a successful AI-driven investment strategy. Next, gather and prepare the necessary data. This may involve collecting historical market data, economic indicators, and company financials. Data cleaning and pre-processing are crucial steps to ensure the quality and reliability of the AI's analysis. Accurate and comprehensive data is the foundation of effective AI-driven investing. Choose an AI platform or software solution that aligns with your investment goals and technical expertise. Many platforms offer user-friendly interfaces and pre-built models for various investment strategies. Selecting the right platform can significantly simplify the process of AI portfolio management. Train the AI model using the prepared data. This involves feeding the AI algorithm historical data to identify patterns and relationships. The training process allows the AI to learn and adapt, improving its ability to generate accurate predictions and recommendations. AI in action, a hypothetical portfolio demonstration. To illustrate the power of AI in portfolio management, let's consider a hypothetical scenario. Imagine an investor with a moderate risk tolerance seeking long-term growth. Using an AI-powered platform, the investor inputs their investment goals and risk preferences. The AI analyzes historical market data, economic indicators, and company financials to identify potential investment opportunities. It considers factors such as asset correlation, volatility, and expected returns. The AI then generates a portfolio allocation recommendation based on its analysis. The AI might recommend a diversified portfolio consisting of stocks, bonds, and alternative investments. It might suggest specific ETFs or mutual funds that align with the investor's risk profile and investment goals. The AI's recommendations are data-driven and tailored to the investor's specific needs. The investor can then review the AI's recommendations and make any adjustments based on their own insights or preferences. The AI provides a starting point for portfolio construction, but the investor retains ultimate control over their investment decisions. This collaborative approach combines the power of AI with human judgment, maximizing AI effectiveness. Tips and best practices. To maximize the effectiveness of AI in portfolio management, several best practices should be followed. Regularly updating the AI model with new data is crucial for maintaining its accuracy and relevance. Markets are constantly evolving, and the AI needs to adapt to changing conditions. Monitoring the AI's performance and making adjustments as needed is essential. Tracking key metrics such as portfolio returns, risk measures, and transaction costs can help investors evaluate the AI's effectiveness. Continuous monitoring and optimization are key to successful AI-driven investing. Combining AI insights with human expertise can lead to better outcomes. While AI can provide valuable data-driven analysis, human judgment and experience are still essential for making sound investment decisions. A balanced approach that integrates AI and human intelligence is often the most effective. Diversifying data sources can improve the robustness of AI models. Relying on a single data provider can introduce biases or limitations. Incorporating data from multiple sources can enhance the AI's ability to capture a broader range of market dynamics. Navigating the pitfalls of AI-driven investing. While AI offers tremendous potential for portfolio management, it's essential to be aware of potential pitfalls. Over-reliance on AI can be a dangerous trap. Blindly following AI recommendations without critical evaluation can lead to unintended consequences. Human oversight and judgment remain crucial. Data quality is paramount. AI models are only as good as the data they are trained on. Inaccurate or incomplete data can lead to flawed analysis and poor investment decisions. Ensuring data quality is essential for successful AI-driven investing. AI models can be complex and difficult to interpret. Understanding the underlying logic and assumptions of the AI model is crucial for making informed decisions. Transparency and interpretability are important considerations when choosing AI tools. The cost of AI-powered platforms and data can be a barrier for some investors. Many platforms charge subscription fees, and access to high-quality data can be expensive. Carefully evaluating the costs and benefits of AI tools is essential before making an investment. Reaping the rewards benefits of AI in portfolio management. The benefits of incorporating AI into portfolio management are numerous. AI can enhance investment returns by identifying opportunities and optimizing asset allocation. Data-driven insights can lead to more informed investment decisions and better portfolio performance. AI can reduce risk by analyzing market volatility and optimizing portfolio diversification. By identifying potential risks and mitigating their impact, AI can help investors protect their capital and achieve their financial goals. AI can save investors time and effort by automating many of the tedious tasks associated with portfolio management. This frees up investors to focus on higher-level strategic decisions and long-term financial planning. Automation can significantly improve the efficiency of portfolio management. Embracing the future, your AI-powered investment journey. The future of investing is increasingly intertwined with AI. As AI technology continues to evolve, its impact on portfolio management will only grow stronger. Embracing AI can empower investors to navigate the complexities of the market and achieve their financial aspirations. Starting small and gradually incorporating AI tools into your investment strategy can be a prudent approach. Experimenting with different platforms and strategies can help you discover what works best for your individual needs. A gradual approach can mitigate risks and facilitate learning.